there is a minimum contribution of $500, per family or whatever the case it is, individual. Another thing that, and again, as I mentioned to you, you can get up to $15,000 in grants. Now, surprisingly, this loan could also be utilized with a high balance loan, which means that can go a little bit over $1 million. But if you are a first generation home buyer, you can probably expand that up to maybe $150,000. Every county, every city is a little bit different. And that leads me to my next conversation.
Hi everybody, Jose Luis Morales here. Welcome back to another episode of the Morales Group Show. Today we have a repeat guest. His name is Silverio Garcia. He is with the Silver Mortgage Group. He is the founder and CEO. And today he's going to be going over with us how to buy a home with no money down. Yes, you heard it correctly, with no money down. So a lot of people sometimes say, well, I can't buy a home because I don't have the down payment. What I usually tell people is the most important thing is meeting with a loan officer, because you never know what programs are out there that may be able to help you. I remember a similar situation. I helped the client buy a home with $2,000 down back in the day. That $2,000 investment, now their home is probably worth double, maybe $400,000 in equity, which is unbelievable. So I'm excited about this program because I think it helps people with good credit, good income, but maybe don't have the down payment for a down. So I think it's a great program. So welcome back to the show, Silverio. How are you?
Thank you, Jose Luis. Thank you for having me back again. Yeah, really fun. So let's get it. Let's help people understand how they can purchase a house with no money down. And yeah, it's no baloney. It's actually true.
I know it's funny because whenever you have a title like this, a lot of people are like, oh, that can't be possible. That's not true. Or my dad told me that you need 20% down. So this is an episode that you want to make sure that you watch until the end. So let's get started, Silverio. For our viewers who don't know who you are, who is Silverio Garcia? And then how did you get started in the mortgage industry? And then we can transition to what is this 100% financing program? Who qualifies? What are the income requirements? What are the eligibility requirements? If we would just jump right into it after that.
Cool. So, hi everybody. My name is Silverio Garcia with Silver Mortgage Group. My office is located in Camarillo, and we service primarily the state of California. I've been in lending for 21 years, and great question regarding how I got involved in mortgages is I bought my first house when I was 20 years old. And I remember clearly my dad and everybody telling me it's impossible, you can't do this. And I just kept on digging and digging and digging until I was able to get into a house. It wasn't a pleasant experience, I can tell you that much, especially in the finance side. And I've always had a passion for numbers, and I figured, why not get in this business to try to assist other people any age, buy a house and really tell everybody that you can purchase a house as young as you want to be, as long as you have the 2-year history of employment and a little bit of additional savings and the want to do it, you can do it. So I'm still here after 21 years.
I love it. So talk to us about the 100% finance program. Who qualifies for that?
Cool. So I think it's important for people to understand the basics of this program. It's more of a community opportunity type program. A few years ago, major institutions kind of got reprimanded for not helping everybody in general, meaning that they had a little more preference, for certain, ethnicities or certain areas, and they kind of got slapped in the hand. Off of that, a community opportunity program started resurfacing because it's always been there, but it resurfaced. Where it's a little more open to different groups in different areas, but primarily it's a program that is offered to encourage traditionally underserved applicants the opportunity for homeownership. Now, you can do up to 100% financing, and on top of that, you have no PMI. And one more thing is you basically can get up to $15,000 in grants. So these types of programs are not for someone that already has 10-15% down saved and they're just looking for a little extra, or they want to take advantage of all of the programs. No, this is a real true loan that will be scrutinized, obviously, by the lender to make sure that the applicant really does qualify. Primarily, Jose Luis, this is a purchase only transaction. It is for low to moderate income areas, but it's not limited to first time homebuyers either. Non-occupying co-borrowers are not allowed, and there is a minimum contribution of $500, per family or whatever the case it is, individual. Another thing that we need to make sure is that the clients do require to have 2 months reserves. What does this mean? It means that if your payment is, let's say, $4,000, you need to have at least $8,000 saved after your minimum contribution of $500 in a bank account. Why do they do that? Is because, since you're a first-time home buyer, since you're not coming up with much out of your pocket, they at least want to make sure that you do have a little bit of savings. Like most first-time homebuyer programs, you will be required to have an education, class. Usually something very simple, that anybody can do, and it's very educational. But to give you an example, in our areas, so usually you can purchase a property in the mid 700s. I would say that's primarily what we're focused in our area here in Ventura County. The minimum credit score is 680.
Mm-hmm.
It is traditionally lower than the norm because most first-time home buyer programs will require a higher credit score, usually in the 700s. And again, as I mentioned to you, you can get up to $15,000 in grants. Now, surprisingly, this loan could also be utilized with a high balance loan, which means that can go a little bit over $1 million. The thing is, or the trick to this is that, again, this is usually for people that are underserved in underserved communities, and very rarely we're going to see that $1 million property will qualify for that. So if you are, for example, a first generational home buyer, and that's the new thing, I don't know if you've heard of that recently or not, but a first generational home buyer is the new introduction that some of these banks are bringing into the equation. So a first generational home buyer is someone who has not owned the property in the last 3 years. And on top of that, this is what it's a little interesting, that your parents never owned a home, or at least they haven't had one in the last 10 years. This is a little tricky. Personally, doesn't sit well with me, to be very honest with you, because of the fact that, let's assume for a second that your parents, did well for themselves, and you're trying to do the same thing for yourself, and you don't necessarily have their help. So you're not going to be able to obtain a loan like this because they're already homeowners. But they want to focus on people that are truly first-time home buyers, in a whole family setting. Does that make sense?
Yeah, it actually does. So it's basically, at least for this 100% financing possibility, they've got like a certain demographic, and their demographic is like, okay, you haven't owned a home in the last 3 years, and your parents haven't owned one in the last 10 years, which means that like you're almost like the first one in your family tree.
Yep.
Like to be able to own that. Obviously, I don't think it probably counts sisters or brothers or anything like that, but at least from your parents. It doesn't. Does it count the brothers or sisters? Like if my brother owns a home? No. Okay, good.
No, it's just your parents alone. There's obviously other small, changes. For example, if you inherited a property, that does not count, or if you were raised by a guardian, it doesn't really count. Foster care. There's a few other small exceptions that, obviously they're a little more technical, that we would have to kind of look into that, individually, right? But the reason why these topics are important is because if you fit the category of a first time buyer and a first generational home buyer, it also means that you have the ability to utilize more of your income to qualify. So for example, if you're a non first generation home buyer, the average income that you can use is somewhere around 98,000. But if you a year, which is extremely difficult to qualify in Ventura County, But if you are a first generation home buyer, you can probably expand that up to maybe 140, $150,000. So every county, every city is a little bit different. And that leads me to my next conversation that you were asking regarding where can people obtain these loans. So primarily, these loans are very centralized to a specific, want of each investor. For example, Ventura County fits there. Uh, let's say Riverside will actually qualify. Los Angeles, just to name you a few, San Diego, San Francisco. But they're very specific. They're in reality, there are about only 8 or 9 counties that will qualify for this. Luckily for us, like I said, Ventura County is one of them. Los Angeles is one of them, and if you ever do business in Riverside, that would be another place where
Area.
it would qualify for that.
Now you said something about early on. You said something about low to moderate income areas. So what does that actually mean, and how do you know if? And I know you're saying Ventura, Los Angeles, Riverside. How do you actually know if your area is low to moderate income?
Census tracts. So basically, what
Okay.
happens is that there is a specific website that we utilize where we actually input the address, and it will tell us if the actual area is located on a 50.01% or more minority owned. Um, it all really depends, obviously, in your specific area. But I would say that if we speak about, Ventura County in general, let's utilize Oxnard for example. I would say the vast majority of South Oxnard and some parts of Northern Oxnard will qualify because, traditionally speaking, the minority census tract will actually, capture, how many minorities live in that area, and that will qualify. So anything over 50% minority owned
Minority
will
owned.
qualify. Yeah. I even plugged
Got
in
it.
one time an address in Camarillo, and it still qualified by just a little bit, but it did qualify.
I love it. Now, let me ask you this: like, is there a website where like the public can view this, like, and verify individually, or is the best thing to do to reach out to somebody like you
It's best
and
to
see
reach
if they
out.
qualify?
It's best to reach out to a professional. It's sincerely is not user friendly, and you have to look at tracks and you have to look at a couple of different things. Even for us, it's not very easy. So, but yeah, I would ensure that whomever you're working with understands these programs well, and they can actually check the address. It also makes it a little bit tedious for the real estate agent because we have to be checking every property. But again, we're helping a very specific type buyer.
Yeah,
That's
and I
why.
think it's a great program. And the reason is that it's helping a specific type of buyer. So here's what I kind of witness, and I don't know if you witness the same thing. I noticed that a lot of people will be like, oh, I don't qualify for this reason, or I don't qualify for that reason. Or my cousins try to get qualified, and he said, I don't qualify for that reason. What a lot of people don't understand is that there's so many different programs out there that are maybe specifically, and if you work with a loan officer that understands those programs, they'll be able to say, well, you don't qualify for that program, but hey, look, there's your parents aren't homeowners, you're not a homeowner, there's actually this 100% program that you qualify for. So I think instead of self disqualifying yourself, talk to a different loan officer or somebody with experience in that, and then they'll be able to help you. Like when I bought my first property, I qualified. People would tell me that you needed 2 years of work experience, but there's an exception if you're a university graduate and you work at get a job in the same field that you graduated in. You don't need that 2 year requirement. So I was able to bypass that and qualify like right away upon graduating, which is a good thing because in those 2 years I would have had to wait. The real estate market started going up, which I would have had to wait. Now, you mentioned something about 15%. Like if somebody already has the 15% down payment, that they likely wouldn't qualify for this. Like,
Yeah, so
what is that? What
basically
does that
the
mean?
idea is that they wanna utilize this program for somebody who truly needs it. Does that make sense? Let's assume for a
Yeah.
second that somebody really doesn't have the financial ability to save 50,000, 800,000, but they have good credit and they have all the basics. It's a situation that these community programs do not allow someone who is well qualified to utilize these programs because they have the ability to fund that themselves. So just piggybacking on the stuff what you were talking about earlier today is true. When we look at our clientele, let's assume for a second that somebody's listening to this and they're like, "Well, man, my parents already own a home." Okay, cool, not a problem. Look, ask. because there's state, there's federal, and there's local assistance programs in each city that may be able to assist you with some or most of the closing costs. Example, let's assume for a second that you could utilize a program that is not this 100% financing option for whatever the case would be, and you will be able to utilize a, either a small loan that they can provide you, or you can do, for example, a grant that you may be able to obtain. So don't get discouraged by the fact that you're a first-time buyer, multi-generational buyer, whatever the case it is. Just ask the question before you discredit yourself, because homeownership is fairly easy to obtain if
Attainable.
you have the right team behind you.
I agree 100%. And once again, I see a lot of people self-disqualify themselves. So how does it work? Meaning, like, is it 100% financing? Is it one loan? Is it two loans? Is there a repayment for that money? Like, what are the things in the background that
Great
are
question.
associated with this?
One single loan, which makes it super cool. No PMI, which makes it even more amazing. 680 FICO score, which opens up a wide range of qualified buyers. And as I mentioned to you, there is a piggyback, which is a grant that you can obtain up to $15,000. When I say up to $15,000, it also comes back with how much income you earn, and so on and so forth. Whether you are or not a first generation home buyer, all that stuff comes into play. But if it's a grant, there's no repayment on it. So basically, you get that money and you don't have to repay it. That's it. It's just a simple grant. So you can also have the sellers help pay some of the closing costs if in case you needed a little extra. But I would say that if you could qualify for this loan, there's a great likelihood that you also qualify for the $15,000 in grant money.
Got it. And then if you get the grant, does that have to be used towards closing costs? Or, like, let's say the seller pays for the closing costs, could you take that money home, like meaning buy the house and end up with $15,000 in your pocket?
That'd be cool, but no, not really. It has to all be utilized towards the purchase. I like your thinking,
love it.
but yeah, we have to be straight on that one. No, it has to be straight utilized for closing costs, correct?
I love it. Good. Anything else that you think that people should know about this program with 100% financing?
Sure. I would say get qualified, ask questions, ask the right, loan officer wherever you're at. Make sure that they understand there's several of these types of programs, Jose Luis. It's not just one single one. Every institution has, different variations of it. I think that the most important thing for people to know is that there's income limitations, credit limitations, and location limitations. So not because you want to live in a very specific part of the city, this may qualify you. So just be wise about choosing the right product, and just don't laser focus on one specific product either, because sometimes different products will work best for different people. So just open up and ask questions. That's for sure.
I agree. So the main thing, moral of the story, is talk to a loan officer and basically see what programs are available for your specific situation. Just because your cousin didn't qualify, or your parents are saying that you don't qualify, or you think you don't qualify, that doesn't mean that you don't qualify. Main important thing is talking to the loan officer. I'm glad that I talked to the loan officer when I did, because that saved me 2 years and probably $50,000 to $100,000 in equity that I wouldn't have been able to maybe qualify at that point for a single family residence. So main thing is just get educated. So Silverio, if somebody wants to get a hold of you to go over this program or any other programs that you have available, what's the best way for them to do that?
Cell phone is 805-479-9283. And you can definitely follow us on social media. It's at Silver Mortgage Group. That would be Instagram, TikTok. And if you want to follow me in Facebook, is my name, Silverio Garcia. And, we'll have lots of different, informational videos there as well. And you can send me a direct message there as well. But 805-479-9283 is a cell phone number and a text. You can text me there as well.
Got it. And then just for our viewers, if you buy a home, maybe with little money down, and then you're like, well, I want to bring my payment down. Silverio did another video on how to finance an ADU, which I think is a great way to make properties more affordable for everybody out there. So we'll tag the link below. For our viewers out there, once again, Thank you so much for taking the time to watch this episode. Silverio, thank you for coming on and sharing. If you've enjoyed this episode, make sure to hit the share button. If you feel that this episode would be helpful to somebody, make sure to hit that share button and make sure to subscribe. So thanks again, Silverio. To our viewers, until next time.